Well, one segment where we're seeing action, welcome back, you're watching India Market Close, is the life insurance space. New surrender value norms coming through. Surrender value, largely the value which a policy holder will receive on surrender of his policy if he chooses to do so. Earlier, if you are a policy holder, you were going to surrender your policy. In the initial years, the surrender value would be very, very small. However, that has now been tweaked, been changed, and the value now depends on what you would have received at the end of the tenure, discounted basis the Indian 10-year government bond yield, which is roughly 7%. But between that Indian 10-year government bond yield to 50 bips more than the Indian 10-year government bond yield. So around 7 to 7.5% is where the discounting would work to broadly. Now, in terms of this, it's obviously a big positive for the consumer, for the customer, a likely negative in the near term at the very least for life insurers. That's the broad thesis, because life insurers will have to pay more and likely there will be more surrenders for any policies which are missold, and that's basically the objective of the IRDAI. And it's of course to protect consumers and policyholders from all the mis-selling that likely is happening. At least that's basically the goal and the underlying. Now, in terms of what the brokerages are really suggesting, but before that, first off, very quickly, HDFC Life coming out clarifying that only 100 basis point impact on their margins. So that's one possible negative, at least in the near term, straight off the bat. But outside of that, let's pull up what Nuvama seems to be suggesting. And what they're saying is that the special surrender values is of course set to increase. They're highlighting that. They're saying it's to prevent and curb mis-selling which is happening at policy holders level. They're also suggesting that the likely effects will be, in fact, a consequence of this will be reduced commissions and lower margins. And the reduced commissions, of course, is that the upfront commission will likely reduce, which will obviously help the life insurers. If that does not happen, then margins will come off quite sharply, like HDFC Life has guided for 100 basis point margin decline, at least right off the bat. Now, growth impact currently is uncertain as per Nuvama, and therefore a likely impact on growth also will come through. Some guidance from companies expected on this front. Nothing as of now from companies. Also, in some form, it's a major overhang which has gone away, because this norm has been in the works since a while. So life insurers have been under some amount of pressure in terms of stock performance, and therefore some overhang gone away is a possible positive. But this is what is probably the key. Non-linked savings of HDFC Life, Max Life and LIC are the highest, and therefore likely the largest impact will be here. HDFC Life has come out with a clarification, Max Life, LIC still awaited. But let's quickly move forward onto the key ones which Nuvama is looking at in terms of life insurers. There you go. You have the upside as well as the target price for those three stocks, along with maybe an LIC as well. I think Nuvama has a 1200 target price on LIC. There you go. Also, let me quickly move on. Citi also coming out with its note. What they are seeming again to suggest largely is on similar lines, on similar grounds. They're saying that it's still not very clear what the impact will be, and these are the target prices that they've given. Again, pick of them all would likely be an SBI Life and an HDFC Life. HDFC Life because valuations are depressed, and SBI Life purely because of the muscle of State Bank of India in terms of distribution and reach. LIC also commanding a decentish valuation. So broadly, this is the theme that's playing out in markets today and will likely play out. Keep your eye out on the life insurance space.